Good afternoon. It's Thursday, March 31st, and this is Ask the Experts. I'm Chris Grams. I'm with CME Group, and I'm joined by two grain and agricultural experts. We're going to be sharing their insights on today's USDA Prospective Plantings Report. Jack Scoville is at the far end. He's Vice President with Price Futures Group. And to my immediate left is Terry Roggensack. He's founding principal at the Hightower Report. Before we dive into the reports, a couple of notes for our online viewers. I've been receiving some questions already. At the bottom of that screen, you can input some questions. Please send them through, and we'll make sure that our experts answer those for you. We'll also have an archived version of this available on our CME Group YouTube channel. That's youtube.com/CME Group TV. And lastly, a small note, this is going to be our last Ask the Experts panel. Starting April 12th, we're going to be doing a new format, so we're excited to roll that out and to keep you, the viewers, updated on that new format and how we're going to be engaging with grain experts moving forward. But for today, we had an interesting report, Prospective Plantings. Terry, why don't we start with you? I know we had a little bit of a surprise on the corn acreage side, but what stuck out to you in today's report?
Well, I think between the low number for wheat acres and the high number for corn acres, really a kind of a shocking report that you can get that many corn acres planted in a very depressed price setup for the corn market right now. And like Jack already said, are we going to be able to get all those corn acres planted? We already have trouble in the south. Can we expect any kind of normal type yield this year, given the less inputs and the less fertilizer that might be used? And will we get any switching right now, because the producer still has a chance to switch over to soybeans or spring wheat with the corn acres, as long as they haven't put anhydrous on yet.
Jack, any thoughts on today's top-line results?
Well, going into the report, usually when you look for a surprise in this particular report day, you expect it to be coming from the stocks report. Today it came from the planning intentions report, which I think we have to remember are just intentions. These intentions were taken several weeks ago, and you knew that there was going to probably be a lot more corn acres, because there were indications that producers wanted to switch back into a more normal rotation pattern, and soybeans have been the better paying item here over the last few years. But certainly a shock there. I agree, the spring wheat number especially, and the hard red winter number lower than I think a lot of people were expecting. So you certainly saw a reaction in both the Kansas City and Minneapolis wheat markets, a little less so here in Chicago wheat, because the soft red, or here in the Midwest, wheat planting actually should be higher. And then the other big shocker of the report was the rice. No doubt about it, a huge increase there, over 3 million acres, and really been looking at somewhere under 2.8 million acres. And really, when you broke down the rice, you saw that a lot of that had a chance to be long grain. It was in the Delta and down into Texas, where most of the increase was, and in fact less of an increase in California than the trade had expected. So all in all, there were a lot of surprises for everybody on the planting intentions report, much less so on the stocks report.
Well, it's good that you bring up stocks. Jack, would you or Terry care to comment on stocks at all? I think I've read that we're at or near record level of stocks in some of the grains. Is that right?
Well, yeah, we are. The stocks levels are high, but we anticipated that those were high, and I think that was really part of the market. And that usually is where you do get a big surprise. But we have plenty of soybeans, and we have plenty of corn on hand, and we're going to have to continue to move it, and that should help keep prices for both soybeans and corn pinned down. The one interesting thing to note, though, about especially over on the soybean side for right now, but a little bit for corn, is that things on the macro level seem to be changing. The dollar has been getting weaker in the basket of currencies, but it's also been getting weaker against the real in Brazil and the peso, and that hopefully will help us keep our export demand pace maybe a little bit stronger than we would have expected just a couple months ago.
Terry, anything
Corn,
else to add
corn
on that?
stocks were 7.808 billion bushels. The range of estimates was 400 million bushels, and we came in 10 million bushels above the average trade estimate. So, like Jack said, we came in pretty much right on expectations. The corn acres were up 6%, but sorghum was down 15%, oats were down 11%, barley was down 12%, and wheat was down 9%. So kind of a big, different mix of plantings across the board.
So most of the surprises in the acreage side of the report today, not so much in the stocks. We have a number of great questions that are coming in from viewers, and so I do want to get to those, but maybe for those of our viewers who haven't been following the market as closely, you gentlemen could sort of give a sense of how the futures market has reacted to some of the surprises on the acreage side today. Terry, why don't I kick that to you, if you don't mind?
Sure. The corn market sitting with the huge acreage number, we immediately went to contract lows pretty much across the board. We've had a downside count of about 366 for December new crop corn all along, and we hit that level today. That could be the worst of the news is behind us now if the acreage numbers aren't as big as we got today, if the yield numbers aren't as high as traders expect right now. The China announcement of their getting out of the grain storage business after 9 years. Their 9-year ban on ethanol production is gone. They have a huge amount, maybe 40 to 50 million tons of corn that'll be moving out of their stocks onto their own local market over the next year. And so a lot of negative news all hit the market at once. Trend following fund traders are likely a record net short as we get into next week. And the market possibly could have put in a spike low today.
I want to pick on that point because one of our questions came from someone who was curious about the short-term versus the long-term impacts of China eliminating their corn reserve program. So in the short term, you're saying, this news has probably been factored into the market. Any longer-term effects that hedgers or others should be thinking about relative to this news?
Clearly, it's negative news short term. There's more grain moving on to the free market in China quickly, but corn prices, and if you convert them to bushels, dollars per bushel, we were $10 a bushel last year at this time. We were $7.70 a bushel a month ago in China for the Dalian exchange, and the May contract closed about $7.65, so another $1 down in the last month in corn. So as that corn price comes down in China, the usage numbers should really, really increase. But short term, it's a negative because DDG exports will drop off, barley exports will drop off, sorghum imports to China, exports from us will drop off. And the U.S. will have to absorb that extra feed grain over the next, in the months ahead.
Jack, anything to add on that point? I do have a South America question for you, as I know that you do follow quite closely, but in that vein, either China or South America, but particularly Brazil, and what's the probability and potential market impact of an impeachment situation there in Brazil?
Well, I think right now we're seeing a market impact in that a lot of producers are starting to hold soybeans, especially because that's what they're getting done with harvesting, and they'll probably start holding a little bit more corn off of the market. I remember back in the days in the hyperinflation days, that was basically their bank, and I think a lot of producers probably do as well. And I think they feel like it's better to just hold on to the grain and see exactly what does shake out. I think the market is probably expecting, maybe if not an impeachment one way or another. The Dilma's days are kind of numbered down there, and maybe that's true. She certainly seems to be trying to hold on, but whether she can actually do that or not is I guess, kind of very hard to say, and probably very problematical. She's got a big problem, and I think the market anticipates right now that once she's gone, if and when she is forced from office one way or leaves office one way or another, that we'll see kind of more market-friendly policies. And I think it's been one of the reasons why the real has been able to stabilize and actually firm up here, is an anticipation of the political situation probably getting better here. And that's probably beneficial to us, because if the real does continue to improve, it helps our competitive position here in the U.S. Against Brazil. And the fact that Brazil maybe isn't going to be quite such an aggressive seller helps us sell a little bit more. Now Argentina is going to sell. We know that. It's not going to. It doesn't mean that it's going to get real easy for us. But for now, I think we're starting to see, I think, some of the price stability we saw in the soy complex here today, and that we have seen, or the strength that we've seen over the last couple of weeks, is anticipation of the political situation resolving itself into a situation where a more market-friendly and a different government comes forth here pretty soon in the short term.
Okay, so we've talked a little bit about the Brazil effect, a little bit about the China effect. Let's talk about U.S. producers and what does today's report mean for them. Terry, we had a question earlier, and I think you've been shoring up this answer for us, but somebody asked, what's the current producer break even for corn prices in the Midwest?
Well, we had a total cost of production right now for an Illinois producer at $3.99.5. $2 though is the variable, so their variable costs are at $3.99.5 though is total. That's what we came up with today. So we're currently under that level, and that's a big factor. I did talk about the China short-term negatives, but the longer-term positive of the corn stock situation. They've got major air pollution problems across many big cities, and so they are cranking up the usage, cranking up the ethanol as a solution to their air pollution problems. So that's going to crank up. The price dropping from $10 to $6.50 a bushel and still going down is going to encourage the usage of corn. And meal usage could actually get hurt pretty good over in China. So we could have a lot bigger usage for corn coming out of China. 53% of the world stocks are in China right now for corn. So that can quickly come down, especially if they had any kind of weather issue there. The other thing, in Argentina, the Buenos Aires Exchange today came out with a 60 million ton bean crop estimate. The USDA is at 58.5. I think a lot of people are inching up Brazil numbers too for the coming report. So you could have 4 million extra tons of bean production out of South America, maybe.
Yeah, you could. I think, people are looking probably at about 100 million, somewhere right around there for Brazil, and 60 million I think is pretty much in the market now, and then you figure 10 or 15 million for the little guys. And it's a big, don't get me wrong, it's a big crop. There's a lot of soybeans to sell from down there. I just think, though, that we're seeing that instead of it being a slam dunk that you price-wise, that you move down to Brazil or Argentina, because some of these changes that we're seeing politically and in the relationships between the various currencies, maybe our competitive position won't be quite as bad as we thought.
Okay, so a little bit more on China and South America. What about weather here in the U.S.? Is that a factor? Could that be a factor in the midterm as we get into planting season full bore here, as we get into growing season? We've had an El Nino situation, the possibility of some La Nina and some warmer weather later in the summer. Could that offer some relief in terms of prices to producers? What are your thoughts on weather? And
well, we got to get it in the ground first, and that's a start. And it's been wet down in the south, so that has hurt the initial planting progress. It's if we continue to have a wet spring, we could see some switching just because of that from corn into soybeans, for example. And take it from there, I think overall perspectives that I've seen are that the weather should be generally pretty good for growing this summer. And if that's the case, that certainly won't help prices any. But just for now, we still got to get it in the ground. And if we have an early spring, that usually favors corn. So far, it's been pretty moderate so far this spring, so that should favor corn. But it's wet.
Yeah, the south is wet. Another 2 to 3 inches this week. They were already way behind Mississippi, Arkansas, Louisiana. But so that's a bad start. The longer-term weather guys, which is a very tough business, but the longer-term guys on the El Nino to La Nina shift kind of say you got a 50-50 shot this year of the late season dryness, which would be more bullish to beans than corn if you did have late season dryness or heat. In a normal year, you have 15 or 20% chance of some bad weather, but some of the longer term guys are saying you get that shift that can cause dryness in the Midwest. But a 50-50 shot certainly better than a 15% chance of poor weather. So a lot depends on the yield. I mean, if you taking these huge numbers for corn, if you get a 169 yield, I have a 2.6 billion bushel carryout and a 19% stocks to usage. So that's a huge jump from 13.6 now. If you have a 158 yield, which will be roughly about the fourth best yield in history still, that's not a major weather problem. You're still only down to 1,689 and a 12.3% stocks to usage. So a little bit tighter than this year, but not much. And that would be in a 158 type yield.
we did a webinar last week with your partner David Hightower, and he mentioned you can't start hedging your 2016 crop today. You should have been doing it in November of 2015. However, what does today's report mean for producers, and what advice, both of you work with producers and hedgers, how are you advising hedgers and producers in light of today's news, today's report?
Well, first is know your break even. And for both beans and corn, if we get a chance to hedge off at a profit, I would expect to do that. I would think that we're going to have to be a little bit more attentive to the smaller moves that the market may create to provide some buying and selling opportunities that and maybe trade the crop a little bit more than we might have had to do over the last few years. Kind of back more to what we used to do in the past. The past several years it's been easy. All you really had to do was sell. This year we're going to have to manage those sales a lot more carefully and be willing to take profits where they're available. Probably just in case, if we are able to get some good sales on the books, I'll probably want to back some of those up, just have a few calls around in case we do get something like the late season dryness, or who knows what else could happen. But I think one thing I'm going to have to be very working with is knowing exactly where those break-evens are and what I need to do to guarantee that my farmers are in business next year.
Going into the report, we certainly talked about double put coverage, lift one or both on a sharp break. So you got the sharp break, probably lift both of them. But from here on is your real question. And
Right.
corn producers are in a very difficult situation. And if you haven't done anything yet, you really have to wait and see what kind of rally we can get on plantings or on early type dryness. The market's still going to be sensitive, and the market's currently extremely oversold. So you're going to need verification for the bears to stay in the market. So I think you will get some kind of rally to do something in corn. In the case of beans, the upside seems limited, given the potential just for anything close to normal, I think. Because of the global stock situation, the upside does seem more limited than corn. And selling some out of the money Nove call premium, maybe the 10.50s or 11, and use that money to buy some puts underneath the market might be a way to go. If the weather stays decent and you still get some more South America pressure, I think producers in general are not covered as much as normal so far. So if you could end up with an 8.45 type price for Nove beans here eventually. And we had a decent rally today, so maybe you'll follow through up some, be able to sell some call premium and put a little bit of a floor in there on some kind of put premium.
Well, and that's a good point. One of our options experts mentioned that we have been in a bit of a suppressed volatility environment, so perhaps that's an opportunity for users to take advantage of that to get some protection through the use of options.
Well, it implies you buy options rather than, when your cheaper volatilities come into play, that's when you want to be playing alongside options, long calls, long puts. And we do get a pop here and the volatilities increase, that's when you can start selling some of the premium to help reduce costs or, whatever you need to do.
Well, we just have a few minutes left, and so I thought I would give you both a chance to have any closing remarks. Terry, is there anything that we missed or anything else we should point out about today's reports? Any closing thoughts from you?
Well, we didn't talk much about the wheat market, and those are pretty shockingly low numbers for wheat. I think Minneapolis wheat especially looks like it could go up to maybe 572 or 588.5 area. The market spiked down, held support today, and July wheat actually looks pretty decent. Maybe you can get a rally up to 539 area. Globally, you do still have some El Nino issues. There's argument in India whether you got a 92 million ton crop or an 82 million ton crop. There's still dryness issues through Southeast Asia and in India that you don't know what can develop. If we do have good yields though in the U.S., you're still going to be stuck with some pretty decent carryout, but it's still a long growing season ahead. And while wheat broke this week on ideas that way out in the forecast we got rain coming, and there's not a lot of rain in the next 10 days in western Kansas, and I think western Kansas, western Oklahoma, West Texas could see deteriorating wheat crops over the near term. So I think
Well, and we did get a question before we started recording about when was the last time the wheat acres were below 50 million during prospective plantings. You guys looked that up for us. It was 48.7 million acres in 1970. So that was another bit of a surprise today. Jack, closing thoughts?
Well, yeah, we didn't really talk. We did talk a little bit about wheat, but not a whole heck of a lot. And that was probably the surprise of the report, and should provide, I think, continued support, especially to the Kansas City and Minneapolis markets, with Chicago probably the tail end of that. I think also it's important to remember that these are intentions, and the survey was taken quite a while ago. No doubt the price reaction today will change, will help modify some of these intentions, and we could see these intentions be modified even further depending on how we see the weather play out. But I think it's important to emphasize once again for producers here, producers around the world that do hedge here, and they do hedge here all over the world. To know what you need to do to stay in business and be prepared to act when those opportunities arise. This markets go up and down, and right now we've been down an awful long way, especially in the corn and wheat, a little up, and to a certain extent the beans. We're seeing that also in the rice. We should probably get some opportunities over the next few months. Usually the market gives you a chance to make some money, and I think this year it's important that we make sure that we take those opportunities as they're presented. And I think for the buy side, which I also deal with, we're seeing some pretty nice buying opportunities riding through here. No doubt we'll get at least one or two weather. We usually kill the crop a couple times. And if these types of prices work with your structure, then go ahead and extend some coverage in through here. Use these types of good prices to get some coverage on the books and extend the coverage a little bit.
I would just add that in the corn, end user hedgers certainly have a real good advantage here to take coverage, and maybe in some leverage coverage against potential problems ahead. So that would be something like selling a little bit out of the money, sell a 380 type call and buy multiple 7 or 8, 9, 10 out of the money calls just in case the weather turns. That end user will be highly leveraged if we do turn, and if we don't turn, no harm done.
Well, I want to thank you both for lending your expertise to us once again. We really appreciate your insight. Our guests today have been Terry Roggensack with the Hightower Report and Jack Scoville, the Price Futures Group. Again, you can find an archived version of today's panel at our youtube.com/CME Group TV site, our channel. Thank you very much.